Could Japan be about to bring the whole damn system down? Is everyone about to get blindsided? And it's not the usual suspect, is it? Everyone's, oh, what's happening with the U.S. economy? What's happening with China? What's going on with Russia, man? Oh, no. Japan just quietly, humbly out there about to implode everything. They stepped into the danger zone recently. In 2024, the unwinding of the yen carry trade sent a warning shot across the bow of the global financial system. It was a nice reminder. This East Asian nation still holds 4% of the global economy. It's the fourth biggest economy in the world, and it holds a gargantuan amount of U.S. debt. Now, currently, Japan's at risk of cracking. If it does, it could end whatever's left of this bull market cycle and perhaps shake faith in the entire financial system as we know it. Yeah. Stick around as we break down the drama and, of course, what it means for your Bitcoin bags. Now, before you dismiss Japan as just the land of anime, samurai, and ninjas, think again. It is the fourth largest economy, GDP of $4.2 trillion, about 4% of the world economy. Its net overseas assets are estimated to be $3.7 trillion, and until just recently, it was the largest creditor in the world until, of course, Germany overtook it. Japan is also home to a lot of big companies you probably know the names of: Toyota, Sony, Nintendo. Nintendo, man. Those were the days, weren't they? N64, GoldenEye, Zelda, man. Anyway. Thanks, Japan. My childhood appreciates this. What's wrong with Japan right now? Let's start with some history lessons. In 2009, Greece collapsed under its debt, triggering a Eurozone crisis which nearly brought down the global banking system and the European Union. Japan, according to its own prime minister, is now like Greece, ... but on hard mode. Much bigger, much more problematic, and far more dangerous. Japanese Prime Minister Shigeru Ishiba warned that Japan's fiscal condition is worse than Greece. The numbers are backing him up, unfortunately. Japan's 2024 debt to GDP ratio is over 250%. Most economists say if you get over 122%, it's over for you. They're at 250, that's twice that number. The highest debt to GDP ratio in the developed world. Nearly a quarter of its record high 115 trillion yen, around $800 billion, 2025 national budget goes towards just servicing the debt and paying interest. That burden is growing fast at a time when their workforce is aging and all the other stuff's going on. Right? A full third of their budget spent on just Social Security to fund the healthcare system for Japan's old people, man. And of course, to support efforts to try to slow its plummeting birth rate, which that's a whole other conversation, man. It's crazy shit. The system is creaking under the weight of itself, and its promises are barely able to keep up. And that's not even the worst of it. Japan is a country surrounded by problems on all sides. What's a nation's greatest resource? It's not its oil, not its gas, not its gold. It's its people. An able, productive workforce in Japan is running out of people. It has a demographic crisis of extreme proportions, and maybe robots will come in and move the needle significantly for Japan in the next 10, 20 years. But the country right now is facing a severe labor crunch due to, well, everyone's too damn old. Basically, there's not enough kids, not enough young people. By 2040, it could be short over 11 million workers. Think about what that means. Fewer people working means fewer people paying taxes, fewer contributors to Social Security, fewer consumers driving the economy, buying stuff. This isn't a collapse. This is a slow motion implosion of one of the world's biggest economies, and its effects are going to be felt everywhere. Elon Musk once said, falling birth rates are a bigger threat than global warming. In Japan's case, he might be right. And then there's the economy itself. Japan's growth has been about as exciting as Ethereum's price action this cycle, which if you know, you know, right? Ethereum's kicking in the balls real quick. Never missed a chance, Lark. From 2000 to 2019, Japan's total GDP grew at less than 0.25% per year. For context, the U.S. economy grew nearly 10 times faster over the same period. That's not a slowdown, that's a stall. That's just like kick it in the engine a few times. Keep pulling the crank, man. It's just not working. And when you zoom in on the GDP per capita, the picture unfortunately gets even worse. This chart from Uncharted Territories makes it look like a meme coin that just got rug pulled, man. It's that bad. This is a country stuck in economic quicksand, barely moving, unable to escape. The rest of the world is lapping Japan right now. And if you're thousands of miles away, you might think, wow, who the hell cares what's going on in Japan, man? I live in Kansas, man. Who cares about Japan, man? Japanese money is everywhere. It's one thing they got going for them. They're rich as shit, and they got their money all over the place. Like what we said in the beginning, it's the second largest creditor holding over $3.7 trillion in foreign assets. That includes more than $1 trillion in U.S. treasuries. If you got scared by a Chinese treasury dump, be very afraid when Japan pulls the trigger. Okay, plus they just said they don't even want to negotiate on tariffs with the USA. They can't. They're backed into a corner. They're screwed. Japanese investors are also major players in European bond markets, emerging market debt, and of course, US equities. That's what the whole carry trade is about, the unwinding of U.S. equity trade. And of course, global real estate. For decades, they borrowed at basically 0% interest at home and poured that money abroad through what's called the yen carry trade. But now, that carry trade is starting to unravel. Rising rates in Japan mean investors are pulling money back home, dumping foreign assets, and causing a drain in global liquidity. That's not just a financial shift, it's a shockwave. When Japan tightens, it ripples through the entire global financial system. And if that accelerates, markets from New York to London to Hong Kong are going to have to adapt because they are going to feel it. So what happens if Japan finally cracks? Well, more on that in just a second. But guys, if you're trading cryptocurrencies, you need to listen to this. Femex, one of the biggest trading competitions of the year for crypto, $5 million in total prizes on the line. That's crazy stuff, man. $3 million in team prizes, $1.5 million individual prizes, and even a newcomer challenge with awards up to $500,000. It's insane. It's a huge amount of money up for grabs here. No KYC is needed to sign up when you use that link right down here, right down below here. This competition is open globally. Doesn't matter where you live. You can trade on Femex. You might need a VPN in some cases. Right now, you can join my team by hitting the link down below. Trading kicks off on June 9th and runs until June 30th. But registration is open right now, so don't miss your shot. Whether you're a seasoned pro or you're brand new, this is your chance to trade with the best and to win big. So sign up, join my team today. Link down below. So, Japan. What happens if Japan finally breaks? I know, nothing ever happens. Everything's going to be fine, usually. But if Japan does break, let's say. First, the yen collapses. If investors lose confidence, the yen could free fall, creating shockwaves in global currency markets. The forex markets would fall to shit in that situation. A falling yen means higher import prices for Japan, but it also triggers huge panic in all global forex markets because Japanese yen is one of the most traded currencies. It's a major funding currency, as we just discussed. Second, if the Bank of Japan loses control of the bond market, yields could spike. It's already happening, by the way. That's a bond shock, okay? Decades of yield curve control have kept their debt stable, but if the Bank of Japan steps back too far, demand for Japanese government bonds could essentially dry up and their debt servicing costs could absolutely explode. Third, Japan may be forced to liquidate assets overseas to defend its economy and its currency. That means, what are they going to sell off? U.S. treasuries, foreign equities, foreign real estate, causing a ripple effect across global markets as Japan essentially deleverages from its multi-decade carry trade. Now, in the short term, this scenario is a risk-off across the board for all assets kind of thing. Falling equities, rising yields, currency volatility, a global scramble for safety. Gold probably benefits from this. But where does Bitcoin fit into all of it? Well, in the short term, it's probably mega bearish if all this actually plays out. Okay, when shit hits the fan in the land of the rising sun, everybody gets sprayed, okay? It'll make the Greek debt crisis look like a walk in the park. This is one of those big events in global finance. If Japan sparks a global risk-off event, Bitcoin won't be spared. Your dog coins, your altcoins are just going to go straight down the toilet, man. It'll be brutal. Institutions will dump whatever they can to cover margin calls, and Bitcoin will likely get caught up in that initial wave. Long term, though, it's great for Bitcoin. I know, Lark, how's this good for Bitcoin? You see, Japan's crisis isn't just about debt or demographics. It's a warning about the faults of the centralized monetary system. For decades, Japan printed money, manipulated interest rates, and propped up markets, creating an illusion that the emperor had clothes. But the emperor has no clothes, and the illusion is starting to break. People are starting to wake up to the reality, man. And that's exactly what Bitcoin is built for. In a world where fiat currencies can be infinitely diluted, where central banks run out of options, and where trust in the governments, in the system, in fiat currency itself is losing meaning, Bitcoin actually offers something different, an alternative, a real alternative for the first time. Fixed supply, no central authority, and rules that can't be changed by panic or politics. If Japan's downfall plays out, as the doomers seem to think that it might, and it will shake global confidence if that's the case, it will shake the global economy seriously. And in that situation, don't be surprised if more people start turning to deflationary decentralized assets like Bitcoin. And yeah, Bitcoin might bleed with the rest of the market at first, but guess what's going to recover first? Guess what's going to bounce back the hardest? Guess what's anti-fragile and absorbs shit like this for breakfast? It's Bitcoin. as they say. What doesn't kill you makes you stronger. And that's basically been Bitcoin's entire life story. That's what Bitcoin does. It just gets stronger. Thanks for watching.